You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim.
We were saying off the air, anyone surprised by what's happening in the markets right now hasn't been paying attention to us for the last 9 months.
Yeah, exactly. You know what's it's amazing. I go out in public, and everyone that I know in my town, when I talk to them, they all want to know about what's going on in the markets. And you know, you talk to them, and they've been talking to their advisors, and they all say the same thing. They all think it's just a correction. Their advisors are all telling them, you know, you just buy and hold. All this is a correction. And you know what? The writing's been on the wall for 8 months, if not 12 months. And you and I have talked about this over the past year, about how small cap stocks were showing heavy distribution. The big money was rotating out of those stocks first. And now this is the first time we're finally seeing that heavy volume distribution affect the large caps. And the large caps are the last stocks that these big institutions have to unload because they're anticipating lower prices. And of course, they get rid of these highly leveraged beta stocks, these small caps first, because they can get rid of those without killing the market. But now they've got these large caps that move the market, and they're trying to unload them. And you know, we could see this with all the technical analysis, the underlying fundamentals, or not the fundamentals, but the market breadth. There's been fewer stocks rising as the market's been going up. It's literally just hanging on by a thread. And of course, last week, the last more or less 10 days or so, where that market collapsed, that was the straw that broke the camel's back. That was a technical breakdown. This is the start of a major market topping phase. Or you could argue that this is the start of the bear market. And really, a topping phase is generally kind of a top to a bear market. So I think we're going to see this bear market start, and it's going to take some time to play out. But this move we saw in the last week it really is going to look tiny compared to the next leg to the downside that could happen in a couple of weeks or over the next couple of months here.
Shanghai should have let everybody know. Once the Chinese market started to collapse, it's going to spread across the planet.
Yeah, the global markets, they used to trade out of sync, and you could move from one country to another and play different things. And these things still move a little bit on their own, but the global market really is all just tied into one. Equities are almost equities. It doesn't matter where you go. It's a pretty tough. It's tough you can't just move from country to country. You really have to move out of equities and find other assets that are going to go up in value while the market falls here.
The advice I heard months ago was take your cash, wait for the crash, and then reinvest. But in the meantime, don't look at something to come back. It's just not going to do that. It's going to have false tops, false bottoms. In other words, you have lots of chances to lose and very few to win.
Yeah, you know what? The stock market is just like the ocean. When the tide is going down, almost all boats go down with it. The only ones that don't are the ones on stilts or the ones hanging from the ropes on the side of the dock. There's very few of them that do that, and you're fighting a trend. When the stock market, everybody worldwide is selling stocks, you might as well just not be in stocks because they're going to be under pressure. Even if they have some buying, they're not really going to rally very much. They're just going to flatline and hold their value, but eventually they're going to continue to get pulled down. And the only really way to play that is to move into inverse ETFs, which rise in value as the stock market falls, or short the market, which means you can profit from falling prices.
You were just saying that's exactly where people should be going. How hard is that to do, though, for people who have tried to time the peak? That's what everybody tries to do is time the peak. Haven't you been listening about take your cash and look for opportunities? Yeah,
exactly. And that's what I've been talking about is no new money should have been going into the market as long-term investments really for the past 8-12 months, because this is coming. This bear market is coming, and really it's very difficult to time the market. And I've been doing it long enough that I don't try to actually time the market per se as trying to catch a market top and try and buy at a market bottom. That is, that's complete guessing, and it doesn't work in the long run. You might get lucky with a couple and make some huge money, which makes it very addicting to pick tops and bottoms, because when you do pick it, the rewards are huge. But in the long run, you're going to keep trying to pick a top, and you just get mowed over. The market will keep going up, and you keep losing, and you try it again, or trying to pick a bottom is even more deadly because prices fall faster. So trying to do this is extremely difficult. I don't so much time market tops and bottoms. I wait for the trends, whatever time frame I'm trading. This is the bear market we're talking about. I'm waiting for this crack that we had to the downside last week. I've been waiting months for this. This is now signaled that we are in a bear market. Lower prices are expected. And so now I've moved my money. Sure, I didn't get out near the top, but I don't want to hold on to things for the rest of this fall. That could last another, 6, 12, 14 months. Who knows how long the market could fall for. Shorting the market is something that a lot of people don't even understand or know what it is. And shorting the market means you're actually selling shares of something that you don't own. So you're short. And eventually, when the market falls in value, you get to buy them back at a cheaper dollar value, and you get to pocket the difference between what you sold them for and the cheaper price you bought them for. But it's very difficult for the average investor to kind of wrap their head around it and want to do that. And I do that. I've got an automated trading system that does this specifically, and it's been working extremely well. This crash that we had has generated a massive profits during a time when most people lost a fortune. So, there are ways to do it that are very simple for the average investor.
And we'll take a look at that automated system right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen. His website is thegoldandoilguy.com. Chris, you've brought in a new trading system. Can you explain how it works and how people can get involved with it?
Sure, yeah. Since early 2014, I've been providing an automated trading system that trades the SP 500 index futures, the ES Mini. And what it does is it trades cycles and trends in the market, and it either is buying or selling short contracts, and it takes advantage of monthly wave-like patterns that happen in the stock market. So depending on the strategy or the system, the stock market always moves in zigzags, and the market, it follows the trend, and it wants to buy near a zigzag low during an uptrend, and then it'll try and sell some profits off when you get a overbought market condition. And as the price gyrates, we can actively trade these waves and pull a lot of profits out of the market. And sometimes the market can go completely sideways, like what we've seen more or less July and August. We've seen the market go sideways. We had this huge crash last week, and the average investor is down 5, 10, 15% of their portfolio. Our automated system, we're actually up over 58% since July to today, which is incredible. And it just goes to show the power of playing these oscillations in the market. We play daily oscillations and intraday oscillations. And when you put them together, you're getting a highly active system that takes advantage of these, what appear to be random price movements, but they're actually fairly measured, and we can trade with fairly good certainty our probability that we're going to have winning trades more often than not. So it's a really interesting system that we've been providing to our clients for almost 2 years. And today, September 1st, we've gone live with our improved trading strategy, which is the same strategy we've used for last year that's generated great returns, but we've improved on it, added more money, position management rules to it, just to reduce drawdowns and risk, and to also take more profits out of the market when we get into some really heavy sideways rotation markets, when the market's chattering really, really fast, big ranges, similar to what we saw last week. We can take full advantage of that.
In other words, the more active the market is, the more money you can make.
Yeah, exactly. Volatility is great, and that's what makes it so exciting that we're going into a bear market, because the stock market falls 3 to 7 times faster than it rises. So when we get into a short trade and the market falls, we can make more in 1 month if we're short the market than we could holding long investments for 7 months. It's just incredible, the profits and in shorting the market. And this bear market is going to be the next major opportunity for investors to, put some of their money into a strategy and system that can actually benefit from falling prices. So they can move to cash into other safe havens with the majority of their portfolio, but they can put a small little nest egg away for it to actively work and take advantage of more or less the financial market corruption and profit from the collapse that it's going to create.
That sounds counterintuitive to the average person. How can you make money when it's losing?
Yeah, and this is where it comes back to the shorting the market. A short sale. If you don't know what short selling is, you go to YouTube, pull up a video. What is a short sale or short selling stocks, and it'll explain it. Sometimes you need a visual to wrap your head around it. But long story short is, I don't own Apple shares, but say they're at $1,000. We'll just say that pre-stock split. I sell one share of Apple for $1,000. I short sell it, which means I don't own it, but I'm selling it anyway. So now I'm technically short because I don't have it to give back. So I've got that $1,000 in my bank because I just shorted it. I sold it. And then the price falls to $700 a share. So now it's cheaper. So I buy it back for $700 a share, and I get to keep that $300 profit because I sold it for $1,000, and I got that money in my hand, and I got to buy it back at a cheaper price. That's short selling. And that's what's great about the stock market is when it falls fast and hard, and you have to actively trade it, which our system does automatically, which is one of the major benefits because shorting the market is fast moving and it requires some activity. But, you can make a lot of money shorting the market. Some of the biggest investors made most of their money shorting certain investments during major market cycles like this. Does
shorting scare most people?
You know what? I think it probably does, just because they don't know what it is. But if you understand what it is, it's not anything illegal. It's not anything that complex. It's just, you just sell something and then you're obligated to buy it back later. It's just kind of how it works. It's pretty straightforward, but there's nothing to be afraid of. It's just the inverse of buying an investment. Instead of buying it now, selling it later, you're selling it now and you're going to buy it back later. It's just backwards, but it's the same thing.
What's going to happen with oil right now? I've heard people say they're so optimistic they think it's going to go up. Others saying, oh no, it's going to hit the 30s, low 30s. It could dip into the 20s very easily. Although I've heard that Saudi Arabia is willing to start talking with everybody to do something about the price.
Yeah, crude oil. Last time you and I talked, we talked about crude oil, and I had two downside targets for it, which was around the 37, 38, and then also down to the 33, 32 area. And of course, price dropped right down to that $37, $38, and we've seen that massive rally all the way back up to about $49 a barrel. And it's back down today about 7%, down at 46. But that $38 per barrel level, that's a fairly significant key level of support. So I wouldn't be surprised if that's not the bottom, or if we don't flounder down here a little bit more, for a few months down here. But I think most of the damage has been done to the chart. This big rally we've had in the last couple of days is a short covering rally. We saw crude oil sell off for months without any real hiccup, any real short covering. And all this was everybody getting off that short trade, and they force price higher when they have to buy back their short positions. So it drives the market up, and that's what we've seen. But I think we're going to see this fizzle out. I think we'll see the market trade sideways between 49 and probably 44 or maybe 43 for a month or two. And I think we might see it kind of drift lower again, test that $38. And then I think the bottom will probably be put in, but it's going to be very volatile here for the next couple of weeks.
Yes, I mean, usually the price of oil drops in the fall anyway because of less demand for driving, really. So you'd really be bucking the traditional trend.
Yeah, for sure. Yeah, this is that won't help at all. So,
what about gold?
Gold and silver, my story really hasn't changed a lot since our last talk, which is gold and silver and miners are still in a downtrend. They are both trading at resistance levels. The miners are underperforming, which is not good. Usually miners need to outperform gold and rally if gold and silver are going to put a bottom in. We're not seeing that. There still isn't really any interest in those higher beta, gold plays, which are gold miners. So we're not really seeing a whole lot go on there. we've seen gold hold up better than silver because it's seen more as a safe haven. Silver's more speculative, but overall they continue to struggle. I think gold will probably be the stronger out of the two during the uncertainty, but they're still in a downtrend right now.
Mm-hmm. How long is that going to last?
I've got a low going in for gold anytime now. My cycle analysis is showing right at the October. I have October more or less being a low. So hopefully we'll see prices maybe drift a little bit lower, and then we end up getting the low put in, and we see significant rally. And by October, we'll probably see the financial markets have more uncertainty, and people will start to move to the safe havens, and that's going to put the bottom in.
I know so many people have been surprised. Usually when you have a downfall in the stock markets, gold's the first thing to go up, and it has not reacted the way it usually does.
Yeah, we're kind of going through a deflationary stage. Everything is kind of just being pulled lower. The only thing that's been moving up the last year has really been equities, and of course that's kind of manufactured the numbers and share buybacks that make the profits per company look huge, and everything has been kind of manufactured on that side of things, but everything else has been falling in value. Commodities are continuing to get pulled down, and I think we're going to see a washout low in a lot of these commodities and crude oil. I think we're going to see everything come back down, test the lows, if not push a little bit lower. And by that time, a month or two from now, I think we'll see the financial markets crack to the downside. We'll see money start to move into physical assets, which are commodities, more or less precious metals, and we'll see miners probably start to rocket higher as safe havens. So I think we're within a couple months of a major shift in commodities and the equities market from the next big moves.
Now, people, of course, are saying if the market is correcting, don't worry, it'll drop 10-15% and then be back on its way. What if this is a 1929 trender where it took 24 years to get back?
Yeah. It very much could be. And it's kind of scary about what could happen. Now, I also have a different scenario that I actually wrote about last night as going back to the 1950s, and we might actually only see a small correction in the market here over the next year or so, a 30% correction in total, and then we could start the next major kind of super cycle in equities. The financial system could get cleared up, things could get figured out. There's a lot that could happen, and nobody knows what's going to happen, and that's why I actively trade the market, and I use, my automated system plays intraday and, daily patterns, so it can constantly play this gyration. It really doesn't matter if the market keeps going higher, sideways, or lower. There are always going to be these opportunities of extreme overboughts, or oversold conditions, and trends that we can take advantage of. And that's where technical analysis, where I am, kind of separates from investing. I'm not so much into the buy and hold. I want to catch these moves and do it repeatedly within a year.
Chris, how can somebody take advantage of your system?
Yeah, you can visit our website at algotrades.net. And from there, we've got a little explainer video, kind of what it does, and you can learn all about it there. And if you have any questions, you can just email us.
Chris, thanks a lot for chatting with us.
Hey, appreciate it. It's a pleasure being on here, Jim.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter at Talk Digital Net. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.